Okay, so that's one of the big news in the oil industry, and Nigeria's oil industry. Just watching on Nigeria's junior oil minister, Dr. Ibe Kachiko, says they are chasing oil thieves electronically, that the government and the EFCC now have a system that tracks oil production, every barrel, and all those vessels lifting Nigeria's crude oil. And that system will be extended to the downstream sector sometime in the future. But first, let's deal with the guys where we do oil production. That's what the Honorable Minister of State for Petroleum Resources told the audience at the Pan-African Petroleum Congress taking place in Abuja. Says the DPR is finalizing what you call forensic analysis that shows every vessel coming into Nigeria, what they're doing in the country, and where they're going when they lift crude oil. There's no hiding place. But this is part of the big story in Nigeria's oil sector. But of course, the global oil industry has a lot of dynamics, and that is part of the conversation we're having this morning right here on the program with one of the investment research analysts at Afrinvest, Adeoluwa Eweje. Thank you very much for coming on the program. It's good to see you.
Thank you for having me, boss.
Great. We'll get to the chasing the oil thieves a little bit later in the conversation. But let's start with the global space, where we talk about the oil and gas industry, or hydrocarbon, as we technically want to put it. So, what's the big story here as far as the dynamics for the upstream sector is over the last year, 2018, so that we don't go too far with a bit of outlook for the new year?
Yeah, so post the moderation in the global glut in oil prices due to the supply, we saw oil investors basically being careful, taking a cautious outlook in terms of investment. And then 2017 we saw a rally in oil prices that it got into 2018. After which it got to a 2-year high in October, where we had about $88, which actually surprised many analysts. So what we've seen essentially is that while the balance of demand versus supply will always be the major factor that the oil and gas operators will consider in making different business decisions, the immeasurable impact, that's of the geopolitics of the oil and gas industry, that remains what will always change the game.
It's very amazing.
Yes.
That everyone's say, look, we got to get out of dirty fuel or dirty energy, which is hydrocarbon. Okay, we're going to have electric cars and all of that. Yet there's so much fight over crude oil. So that means that crude oil isn't going anywhere, at least not anytime soon.
Yes, I agree with you. I mean, crude oil still accounts for over 40% of the world's energy consumption, and that's not going to change anytime soon. Significant development have gone over the years to establish infrastructure that are actually designed to consume fossil fuel. So before you can change to renewables or change to electricity, it's going to take a while. But we are seeing an increasing adoption. So oil and gas operators, investors are actually careful. They are beginning to retime their investments because they know that the end is actually closer than has been previously anticipated.
But again, we still have this fossil fuel, as it were, with us. So whoever has it is still a major player. We're still talking. Some folks are saying perhaps in the next few years, China may start to be a big player there, taking on the United States on one hand. Look at what's happening in Venezuela. Everybody still believes that crude oil or hydrocarbon is still big business because you can't really separate oil from gas.
Yes, you're actually right. For many reasons. So for China, they do not necessarily have the internal capacity to generate crude oil, but they have the ability to leverage on their investments that is across the globe to be able to influence the dynamics of production. And then gas has actually, has been recognized as the most environmentally friendly fossil fuel. So it's essentially the energy of the future. Over the past 2 years, it has seen an increasing adoption. It's one of the reasons why we see Qatar taking a bow out of OPEC, and choosing to optimize their gas export. The Egyptian market has been doing quite well for the last couple of months. They are one of the markets under the African radar that have actually sustained their positive performance, largely due to gas exports.
Morocco, Algeria.
Yes, Morocco. Even for us too, our LNG, they've been doing quite well. They're even looking to expand to 27, and that's significant investment.
So that is that, but we still need to optimize crude oil, which is the energy of today and the cash cow of today for almost every economy, even the United States with the shale gas. You can't turn their back on that. The entire Permian Basin, whatever you call it for Britain, the North Sea, whatever, is all about, or to cover the Russians and the Barents Sea where oil and all that is found. So it's quite huge in terms of oil. So it's a big story for Nigeria as well.
Yes, it is. So what you see in countries like Saudi Arabia and Russia is that they've developed the capacity to quickly increase their oil production when the prices are right, and when they can merge the demand for such. So that's one of the things Nigeria should work on. We've not been able to, even at the before the oil sanctions, which the agreement between OPEC and non-OPEC, which also means that we also have to take a cut back in our oil production, we were barely able to sustain the 2 million barrels per day. And that's shy. I mean, it's a far cry from our capacity.
Why are we locked into this 2 million barrels per day for the last 10 years or so, at least as far as I can remember, over the last 20 years? Even during the Obasanjo's administration, we're just around the 2 million barrels per day. Of course, the militants came and shut us down to, I think, about 900,000 at some point, the height of militants during the Obasanjo's 10 or 8-year period. So we're just within the 2 million band. What's the key issue here for Nigeria? Is it investment? Is it legislation? Is it governance? Is it politics? What is it?
It's been a mix of all you've mentioned. The biggest factor being legislation, essentially. As you know, the PIGP has been on for forever, essentially. And that has actually cautioned investors in terms of taking advantage of any oil and gas assets that you might have in Nigeria. We remain one of the preferred destinations for oil and gas investment because our oil has less sulfur content, which means a higher margin for investors. But with a lack of clarity with regards to our legislation, which is for the industry going forward, investors would want to know what their ROI would be before they move into any sort of investment. So that has been a major challenge. And of course, like you mentioned, geopolitical tensions in the East with pipeline vandalism. I mean, one of the major challenges of oil operators is not being able to evacuate their oil. In 2016, when we had the Focados issue, a lot of companies, including Seplat, was actually affected. I mean, their uptime was barely 20% of the whole year. And that is a huge revenue loss, from what was projected. So we've had issues like that, which have all added up to this whole mess. But if we can take a consistent, holistic approach into preferring solutions into these issues, we believe that the needed investment will be actually attracted and we'll begin to see these guys come back.
Well, we've been trying to engineer investment growth with existing legislation.
Yes.
Ministry of Petroleum Resources, the NNPC group, trying to keep our existing oil partners in place and try to bring in new ones, in particular, well, at some point, indigenous oil oil producers like Seplat, Oando, and the rest of them. But we've not been able to move as much as other regions are moving.
Yes.
And you said because of legislation.
Essentially, because if you compare our country with other oil-producing countries, if you look at Angola, for instance, who recently increased their production significantly. I mean, they too have their challenges, but there's better clarity there. And then one of the things that we no longer have in our favor is we are not the only players around anymore. We are the only player rather. I mean, we have increasing discoveries across other regions, and they're also looking to attract investment, and will probably even take lesser royalties or profit, petroleum profit tax, cut. So you find investors in the oil and gas sector having an increasing number of opportunities to consider before even making a decision. So essentially what we are saying, or what our report is actually putting out, is that time is of the essence, and is actually in line with our general outlook for 2019 on the precipice, which means that we're at a point where we really need to make a decision. Otherwise, it would be difficult for us to...
Not much of a decision will be taken on the PIB until the elections and swearing in are over.
Yes.
So we could just as well bid goodbye to the first half of this year and hope, quote unquote, that the second half will, legislature and the executive will try to think from the same hymn book to get the PIB up in place. Again, this is one factor you laid out very clear, because competition is coming.
Yes.
Ghana, Cote d'Ivoire, the entire West African curve, including little productions in Cameroon and all the way down to Angola, the Gulf of Guinea. It's all footprints. Everybody's seeking oil, no matter how small, how small it is. Even Rwanda is just thinking about. Even Rwanda is hoping to get some oil and gas up, and they can use some oil money if they can find it, and they're working very hard at it. But if you look at the oil price, which is also another major issue within the dynamics of the oil space. How far do you think we've gone in the last 1 year, and what's the outlook?
So in the last 1 year, we saw a rally. Actually, it began in 2017, and it reached an all-time high on the 3rd of October. That was in 2018, to about $88.13 per barrel. And then after then, it actually declined. So what happened essentially was that the market anticipated that the impact of the sanctions, of the US sanction on Iran crude exports, would significantly affect the supply of oil in the market. I mean, Iran owns, they have a significant share in terms of oil production. So they had anticipated ahead that that will lead to an hike in oil prices, and sought to take advantage. So that actually drove up prices up to that point. But what we saw was that major energy-consuming countries such as India was able to secure waivers to be able to import oil from Iran. So essentially, what that factor, or what investors anticipated, was no longer the case, and as a result, oil prices started moderating.
Okay. So I found this chart. This price chart your team put together, very interesting when it comes to the Brent oil price year to date. And again, but more importantly, the outlook over the next 1, 2, 3, 4, 5, 6, 7 years, 2019, 2025. And if that could just come up on screen right now, it shows this, that we've been a little bit wobbling when it comes to the Brent price year to date over the last this month, to be precise. But again, it's been a little zigzag, a lot of volatility there. But again, the next chart was a little bit more about the forecast that we'll find. If we're looking at $72 a barrel in 2012, and we're looking at $74 per barrel this year, okay, then I will see there is a bit of what you call a sky fall. To $69 by next year, and then it's going to stay in the $60 up-end region to 2025.
So that's our estimate essentially, and we've considered several factors. So now we have the US has come into the market. They are here to stay. They have actually overtaken even Saudi Arabia. They produce 17.8 million barrels. So they are the #1 oil producer in the country, in the world rather. So, and that's significant. And the US is not part of OPEC, non-OPEC agreement. That means they can decide to up their production,
do whatever they like, at any time they just wake up.
Essentially. So you already have a part of the oil demand that is already being met. So as a result, the chances of oil prices actually rising to the highs of $80 that we had is a very, very...
It's far-fetched.
Yes, it is.
So because what we're looking at on the second chart on the right-hand corner of the screen is that there's nothing like 80 in the foreseeable 1, 2, 3, 4, 5, 6, 7 years. It'll be very hard to get.
I like the fact that you actually mentioned foreseeable. So that is what is always determining our forecast. But as I mentioned earlier, there's always the measurable impact of geopolitics. Different negotiations, war, anything that could affect supply could actually impact oil prices for that. But the likeliness of that happening is actually very, very minute. So we do not see oil prices rising to the region of $80, at least not in the next 2-3 years.
Okay, let's take it a bit back home and talk about Nigeria's oil and gas. Oil and gas is very, we have a very weak, suboptimal energy sector combined with electricity and all of that. And we cannot divorce or take oil and gas out of our energy conversation. So we need energy, we need gas. So we'll talk about gas optimization, we'll talk about gas utilization, we'll talk about gas flaring, and all of that in that particular space. What is it that you guys have as far as that industry is concerned, and if we have any way out of this quagmire in which the power generating companies don't get enough gas, we're selling gas up there because the power sector pricing, so that sector pricing is left for market dynamics, and everybody's looking for the best price for every cubic of gas.
Yes, you're actually correct. So one of the major impacts of legislation essentially is to actually allow market prices, especially for gas, to reflect the realities of the market. essentially. So we do not have non-associated gas operators in the market. What I'm saying is we do not have investors who have come to the market solely to invest in gas. And that's as a result of the fact that
not doing extraction.
Yes, it's solely for gas. We do not have, but we have
every investor is an operator.
Every investor is an operator. So what we have essentially of our gas production is basically associated. And when you look at our resource, which is about 187 trillion cubic feet, and what we're producing right now, we are not even scratching the surface.
That's the very interesting multicolored. Was that what they call a pie chart? Yeah, that's a pie chart. I still remember those days. Yes, it's a pie chart. The green one is the 41%, right?
Yes.
So look at exports, industry, power, floods, reinjected, producer, internal use. Explain that.
So essentially, what we're saying here is that we have a higher percentage of our gas production actually for exports. LNG.
Which is the 41%.
Yes. So
that's green. That's in dollars, right?
Yes.
Yeah, dollar is green.
Yes.
Okay, go ahead.
So, that has been one of the cash cow for government, and we know that's not going to change anytime soon. But we believe that the percentage of gas production actually accrued for other sectors could actually increase. That is, if we increase our gas production.
What's the percentage of industry here? It's much small.
Yes, it's quite small.
Yes. That's the one in black, isn't it?
Yes.
That's just about 10%.
Yes, so our installed capacity right now, power generation is 12,000 megawatt, and we know that we do not generate up to that. Not to talk of the fact that we have a significant percentage in terms of stranded power. So what I'm saying in essence is that the percentage of gas production that is actually allotted to the power sector is actually small.
Let's talk a little bit again before the conversation, the time gets over, about the industry players.
Okay.
And some of us were quite happy, as it were, in recent years when some of the indigenous oil and gas companies start going in there and picking up some of the assets being thrown onto the market by Shell and a few others over the last 5-7 years. And banks went into this business. And we now saw the emergence of oil and gas firms like Seplat that's making Nigeria proud, listed here on the London Stock Exchange. One of the companies listed recently by the London Stock Exchange as companies to inspire Africa, which was just a few weeks ago. And we are very proud that we saw Seplat Nigeria as a major case study for companies to inspire Africa at the London Stock Exchange. And that was good news for Nigeria just about 3 weeks ago. So that was good. So let's talk about this particular company, which is the only EMP we have on the Nigerian Stock Exchange.
Yes, essentially.
What's the case study? What's the business? And the profits. Return on investment case for Seplat.
So essentially, as you've mentioned, they're essentially the only full-fledged exploration and production company operating in the Nigerian space, and the dual listing on the Nigerian and the London Stock Exchange. Over the years, Seplat has been very meticulous in terms of maximizing their assets, their oil and gas assets. What we've seen is that upon every annual production and operation experience that they've gone back to the drawing board and they've re-strategized. I'll give you an example. So post-2016, when they had the Focados issue, so one of the challenges that they had been looking to overcome had been to diversify their exports, which is actually a major concern for investors. And we believe that, by the time they release their full year 2018 report, it should follow a positive announcement with regards to completion of one of their oil pipelines, which is the Amukwe to Escravos pipeline.
Very interesting if you look at the oil and gas revenue that you guys have on this bar chart, and if you just bring that up from the production room and look at the 2011 to 2017 numbers, as it were, and you see the contribution, of crude oil. Vis-a-vis gas, and you can see at the top there for our viewers, you can see the green is the oil revenue, and the little top in there in orange is gas. And that is keep increasing. Gas is increasing in terms of revenue, pressuring oil revenue a little bit down.
Yes. So one of the
so there's a change of dynamics here.
Yes. So one of the diversification strategies is to invest more in also in their gas assets. So they have two major investments along that line. We have the Oben, which is in one of their OMLs, and then we also have the Ano gas project. That is in conjunction with so that's on their OML 31 actually, and then it also involves Shell. So what we see, and that's a major gas project. What that will do is that they'll be able to produce up to 300 million SCOF, and which will afford them to effectively supply the domestic market and also export to West African countries. So we're seeing Seplat taking early mover advantage of their gas infrastructure by investing year on year in their gas asset and looking to optimize production and also export. So essentially, they are putting, and this is the reason why we actually came out with the title of the report, which is actually wind in the sails. So what you're looking at is they're looking to complement on their successes and also gather momentum, taking advantage of the opportunities as they come. Now, one of the major challenges for gas production historically has actually been the evacuation of gas from the east to the west, because west is where the demand is, right? So
the eastern part of the country?
Yes, to the west. Yes. So
and the west is where the industries are?
Yes, the west is where the industries are.
At least a bit of the heavy industry.
Yes, yes.
Lagos, Ogun,
yes, and the
Banaxis, yes.
The commercial.
Yeah, commercial,
yes.
Major
yes. Yeah, so
why is that? Is it a pipeline issue or what?
Yes, it's essentially been the pipeline issue. So federal government had actually, at some point, they began constructing the OB3 pipeline, which is supposed to actually connect the east to the west. But unfortunately, it has suffered several setbacks. But we are hopeful that within the next 1 year, they will achieve completion. So, and these are one of the things that, Seplat has actually foreseen and they are taking advantage of. Because once that comes on stream, they will be able to effectively take advantage of that pipeline to be able to supply.
Yeah, let's continue. I'm sure there's a lot more in the pipeline to discuss.
Yes.
Let's keep that for another day.
All right.
Adeoluwa Eweje, a member of the investment research team at Afrinvest. Let's get back into the marketplace on Market Street after the break in 2 minutes.